come build a new revolutionary financial system that's automated, that's orders of magnitude more efficient than anything that's ever existed before, right? That's awesome. That's inspiring.
All right, welcome to Generational Arbitrage. I am sitting down with two gentlemen from Floating Point Group. Floating Point is an institutional platform to trade, manage, and settle cryptocurrency assets in a faster and more secure manner. Kevin March is the co-founder. He's a loud and proud Midwesterner from the farmlands of Missouri and a notorious MIT dropout. Before Floating Point, he had a short career in doing genetics research. And David also leads sales and partnerships for Floating Point. He's the dummy who actually graduated from MIT. He was previously at Bridgewater before that. So we got a lot to talk about. I think you guys are on the front lines of kind of like a generational wealth transfer. And I really want to dig into your company, your backgrounds, how you got there, and kind of like what you're seeing in the world of digital currency and how it's evolving. So first off, like Kevin, I gotta ask. I always find when you get dropouts from really good schools, I put you in this like bucket of like Matt Damon and like Ben Affleck. So tell me about your background, and I think it's a divergent quality when you drop out of the institutional path. So tell me about that and how you got to where you are.
So mine was a lot of fun because I didn't actually attend MIT. I was a student of University of Missouri, and I got the awesome pleasure of researching at MIT. But it was
Gotcha.
there that I dropped
Yeah.
out because I met my two co-founders there. And it was just like a fun little Cambrian explosion of ideas that happened that summer. This was in 2017, where we're all sitting around wanting to find things to work on. We're like intentionally seeking out, looking for businesses to start because that's what people do in Cambridge, right? We're surrounded by all these people who had been founders, who had built awesome stuff, and of course the university really encourages that. They give students a ton of money to go play around with servers and whatever other sorts of computing costs you need, marketing costs, etc. So really just launched us into it. So we were looking for an excuse, right? It wasn't that I was just like faced with this awesome opportunity. I was like, man, I'm really torn about this. No, we were just itching for it. And John and Van, they were good students. They actually graduated, but I just couldn't wait. So it was a lot of fun.
And then David, what was your path to Floating Point?
Yeah, sure. And my path to Floating Point, before I get into that, my connection to Tyler actually goes back way before getting into crypto. Some people know Tyler as a leading thinker on macroeconomic trends on crypto markets, but I know Tyler as the basketball superstar at Boston College. And here is a picture of Tyler
Oh
in
no,
his heyday when he played
this
at
is gonna be
Boston College.
embarrassing.
He might deny that he ever got playing time, but this is proof. He's on the court against UNC, a national powerhouse, and that was during Boston College's heyday when they were one of the best teams in the country. I would actually go to games
Oh no.
early to see the team warm up, and Tyler hit all his warm up shots. So great 3-point shooter, was always a big fan. And then when I got into crypto, I met him through this Blockworks sort of connection, and yeah, to say I have respect for him is an understatement. So, Tyler, you might think of us as Ben Affleck and Matt Damon, but you're the real superstar in my mind. Um,
I'm gonna just hand this podcast over to you because that was like incredible. But now you have me embarrassed. So
yeah,
that's
childhood hero here.
yeah.
Um, but yeah, my experience in crypto. So I went to MIT Business School, which gave me the opportunity to network with the MIT undergrads, the real sort of MIT students, and that's where I met John and Kevin and Van. But I didn't come full circle to working with them until after a stint at Bridgewater. That's where I went to right after business school. And once I learned about what they were doing and growing, and just got to know the team and the industry, I was all in, and I jumped from traditional finance right into Floating Point Group, and I haven't looked back since. It's been an incredible experience, and there's sort of only great opportunities ahead.
So talk about the evolution. Like you guys are now a couple years into this and have you're hiring. You really like hit your stride. What have you seen in terms of not only like market structure but also like running a business?
Oh, okay. So I will say it's really interesting, right? Which this is clearly no longer the days of all the crypto companies being teams of 5 and 10 sleeping in the WeWork offices. Now cryptocurrency companies are competing for the best talent in the world. They're able to offer these huge luxurious salaries and compensation packages with every benefit you'd imagine, and they offer the ability to work on really really cool stuff, right? Like it's a whole different ball game now. Um, when we post jobs, I think probably 75% of them are people coming from traditional finance. And the second a job posting opens, there are at least 300, 400 applicants who've applied. It's insane, right? Where, oftentimes what we'll do is we'll have a job posting open for about 2 weeks, and then we'll shut it down. We'll spend like the next 2 to 3 months just going through all the different applicants.
Wow.
So it's a whole different ballgame. And it wasn't like this, like a year ago, right? It wasn't like this 2 years ago for sure, right? But now, we're coming off of a healthy bear market where everyone gets to see what it looks like when the traditional institutions get left behind, and no one wants to be a part of that. Everyone wants to be the side of the race that's winning. And right now it's crypto companies who are doing the innovative stuff. It's crypto companies who are building. It's crypto companies that are growing.
And are you getting like resumes? Like I assume MIT kids are like really interested in this. I always use that as my gauge for what the real growing industry is going to be. It's not Boston College kids like me. It's real technical engineers, and I think it's a real sign. Like you didn't even tell me that before, that you get too many resumes. It's fascinating.
Yeah, I mean it's awesome, and yeah, we get a lot of really really awesome engineers where they're coming to us. Mostly because they have the chance to work in really, really engaging subject matters, where they get to work with a team of like-minded people who are all enjoying the fact that they're solving problems that have never been solved before. That's awesome. That's like the best recruiting material I could ever imagine for engineers. So, most of our focus on engineering hiring right now, which that's pretty much all of our focus on hiring is right now, most of our outreach comes back answered. Right, our response rates on this are really high because we just let them know some of the projects they'd have a chance to work on, and most of those projects are pretty cool. It's not like go to Facebook and make the homepage load 2 milliseconds faster. It's like, come build a new revolutionary financial system that's automated, that's orders of magnitude more efficient than anything that's ever existed before. Right? That's awesome. That's inspiring.
Yeah,
yeah. I'll just add to that. From the traditional finance perspective. Former colleagues, people I know that went on to work at Goldman Sachs, JP Morgan, other big name institutions after business school, they're reaching out and asking how they can get into crypto. And I think there's a bunch of things driving that. I think the first is, folks on the buy side of traditional asset management, they see the trends there. They see the fee compression. They see where the industry is going, how so much is moving to passive, to ETFs, and how there's incredible alpha opportunities in crypto. That's the first thing. And then I think the second thing, which is just as important, is the culture of innovation and cooperation. I mean, there's just no space like crypto where you have both partners and competitors working together to move this industry forward in sort of this broader mission, and to do it in a way where we're constantly experimenting, we're constantly trying new things, and everyone has a mandate to own their responsibilities and take things forward. Very the opposite of sort of the hierarchical structures that you're used to seeing in traditional finance. So it's refreshing, it's fun, and there's a high upside for being very lucrative over the long term.
Yeah, to go on along with that, can you talk about your experience at Bridgewater? Because I think it was we've commiserated over this. I know it's a great place to work, but you felt a lot of the bureaucracy, I believe, that I felt at previous large institutions, Franklin Templeton, and and. Anyway, can you talk about how different it is from there, and like from a risk perspective, because they really are trying to the main thing is they're nullifying risks instead of like being risk forward. And one of my themes I talk about is like a real generational theme is shorting volatility versus being long volatility. And like, what was your perception at Bridgewater from there?
Yeah, that's a great question. First, I'll just say off the bat that I got so much out of working at Bridgewater. The depth of research, the depth of understanding with which they look at macroeconomic markets is second to none. And learning from that approach, from that methodology, was incredibly valuable. That being said, it's a big organization. And like any big organization, they are limited by the size, by the types of clients they serve. And that just is a trade-off in terms of how much you can innovate versus how much you sort of have to keep a giant ship moving forward at a steady pace. So moving over to crypto, night and day experience. Bridgewater is thorough, methodical, that they optimize for deep understanding over speed. Crypto, it's an industry that moves lightning fast. There's constant experimentation. And again, that level of cooperation across the board, from sort of the co-founders of an organization to new employees, from us to other players in the industry, there's nothing like it. So I do think that for someone that is young and interested in innovating, or even someone that's older and wants to sort of be challenged intellectually in their work, there's nothing like crypto.
And Kevin, can you talk about the evolution? Like, I believe when you started Floating Point, you were kind of like finding arbitrages and figuring out how to monetize them, and it became so lucrative. It was kind of like the same Sam Bankman-Fried type of thing, where you figured out these like massive inefficiencies in the crypto market structure, and that's how it evolved, correct?
Yeah, I mean the founding story. I didn't touch on this earlier. I really should have. The founding story is that we started off as an arbitrage hedge fund in a dorm room at MIT, where at first we didn't program anything. We're trying to be good entrepreneurs, where we figure out a business before investing a bunch of time in building the technology for it. So what we would do is we would take turns where two people would always be on the clock. One person would be sitting there clicking the buy button on one exchange. One person would be sitting there clicking the sell button on another to execute instantaneous, almost risk-free arbitrage. And it's like poof, there's 2%. Poof, there's 2%. Poof, there's 2%. You do that 50 times a day, and it was incredible, right? Where suddenly we're realizing that we probably made more money in this month than we'll make in a year of our post graduate school, postdoc salaries as a researcher. We're like, holy cow, right? Like that, you're talking about generational opportunities. We felt it right there, where we saw these spreads that we were trading. At the time, we were trading them by hand, and we compared them to what you would see in the equity markets, because John had been trading the equity markets for a long time. He'd work in a prop shop, he'd done all that good stuff. But we're comparing them, and we're like, holy cow, these are thousands of times larger opportunities than you'll find anywhere else. That's going to go away. So we went all in. And first it started off, as us just capturing those by hand, and then automating it and having a nice robust system. And then it kind of hit us where every single group that we were talking to that was setting up a trading shop, a hedge fund in crypto, they were all experiencing the same things. And that kind of made our entrepreneurial spidey senses tingle, where we're like, look, if everyone is dealing with the complexity of trading on exchanges, both like the actual trading of submitting orders, long running orders, dealing with like the inconsistent and unreliable APIs, to like actually how do you hold assets on these exchanges? Everyone was solving those problems. It really hit us that's where the opportunity lies. So I think like that story of the arbitrage driving things first, like, yeah, it's a huge opportunity, and that's what managed to get us into the space in the beginning. And I think it's still there, to be candid.
Yeah. And to go further, now that you've kind of evolved the product, maybe you can talk about the product a little bit, in several, different products you run, and kind of how your customer has changed. Because I think you're really seeing, like, I talk about these giant arbitrages between, $17 trillion in checking accounts getting eaten up by inflation in US dollars. And you're seeing some of that seep in on your side on the institutional level, because now the legacy, like, giant pools of money are in this quandary where, like, I can't get yield, right? And how are you, positioning Floating Point for that giant kind of influx of cash? Not to jinx you.
I'll let Kevin talk about sort of how we're positioned to that, but I just want to sort of emphasize how big that problem is that you just highlighted, Tyler. There's really two parts to it. One is that you can't get yield, and the other is that the bond portfolio that investors would hold, both to get yield but also to diversify the equity portfolio, does not offer its diversifying characteristics anymore. So it's not just a search for yield, it's a search for uncorrelated yield, for a diversified return stream. And that's what investors are looking for all over the world. They're looking at where they have their 60-40, 70-30 portfolios, where to allocate that 30%. And then as far as diversified, uncorrelated return streams, crypto offers an incredible opportunity for that. And Kevin can talk about some of the sort of things we're talking about with clients and how we can help to that end.
Yeah, and I think really the way that we're positioning for this, the way that we're seeing it, is that investors are going to want to come in and embrace the broad spectrum of things that crypto has to offer. Which, sure, trading on cryptocurrency exchanges and just running traditional strategies of long, short, whatever it is that you're running, momentum-based strategies, whatever it is, like that's one part of the industry. But there's so much more else that exists now, right? Like there's staking of assets. There's an incredible, plethora of opportunities in DeFi with, also staking assets, but in a different capacity of, interacting with liquidity pools. And then Uniswap V3 now has a very complicated liquidity provisioning mechanism that, sophisticated investors can earn returns on. And there's governance. And, now there's this whole ecosystem evolving for investors to get involved with NFTs and all these different things. So long story short, it's getting much broader. It's no longer just going long Bitcoin by trading with an OTC desk or trading with exchanges, and that's the future we're building for. So it's not that we're trying to be the one-stop shop where they can do all of those different things, but we want to be the safe haven from which they can do it. Which like what that turns into is it turns into this custody and settlement platform that we've built where we want you to be able to engage with these things safely with the amount of controls that you would have in other asset classes, right? Where, if I want my traders or my portfolio managers to go out and be able to run some sort of complicated strategy, let's say, part of it is on centralized exchanges, part of it is, interacting with liquidity pools on, in DeFi, we should have like the same levels of controls where the portfolio manager can do that without too much friction, but without introducing, a single point of failure in the transfer of assets, right? A sophisticated investor can't just park, $100 million in MetaMask and tell portfolio manager to go wild. That's not how it works, right? Because that portfolio manager could be like, $100 million is enough to live 1,000 lifetimes in Mexico. Why don't I just go there instead, right? Like that's the current state of the infrastructure. So to put it succinctly, we're building a platform through which investors can safely interact with all of these different mechanisms, all from one central custodial portal, all with those same levels of controls. And we think that the breadth of that allows us to capture all of this new capital that's coming into the market that's wanting to try these new things and find opportunities before the rest of the market does, because that's the part of the market that we're in right now, right? Where mature institutional players are coming in, but they know they're the first. Right. And they're interacting with a heightened risk profile because they see the short-term opportunity of that.
And what types of maybe you can't answer this question, but is it like, are you seeing like the big pension funds yet? Are you seeing, the savvy hedge funds, or is it like, family offices that are they have better mandates? Like what's the ecosystem kind of evolving to?
Yeah, so I'll admit that it started off with almost entirely crypto native shops that had raised money, like crypto native hedge funds or asset managers that had raised money from family offices. That's how it started. That was 2018, most of 2019. Nowadays, you see the whole gambit, right? Nowadays, you see pension funds. It's crazy, wow. Right? Yeah. Nowadays you see sophisticated asset managers with tens of billions of assets coming in and building crypto teams, right? Where it used to be just one partner would go in and they would have a mandate to go pay tuition effectively to go learn about the investment class. Now they're building teams, right? So amazing. We've started to get representation from every type of sophisticated investor that exists, and oftentimes at the largest possible scale. Now it's just further penetrating those groups, but now they're all represented.
Okay, so here's a contra play. So back in 2000, everything busted. People knew that the internet was something huge, right? Do you see is this like 1999 or 2000, or is everything because technology and capital is getting commoditized, right? Is this just going to turn into like kind of this parabolic advance? Meaning you're not going to have the bust that everyone kind of expects in their minds. They're like, oh, this thing's going to bust. And even if they do, I guess, what's your perception on it? Like, do you expect the volatility? Do you expect a crash? Like any of that stuff?
Yeah, I mean, I think a few things. I think, first of all, I don't think this industry is going anywhere. I think there is a sort of process with which the bigger institutions need to go through in order to get comfortable with the space. When you think about the big banks, when you think about the sovereign wealth funds, there are so many stakeholders they need to win over, and we are talking to the champions on the inside of those organizations who are fighting those fights internally. And they're making progress, but it just takes time. There's investment committees, there's compliance teams, but they are all intrigued. We are talking to them, we are educating them on the space, and it's a process. So sort of the direction, even when the price has plummeted, in May and whatever, the demand, the conversations we were having with large institutions was not slowing down at all. So that's the first thing. And the second thing is around the volatility. For many active traders, especially for the FX traders, they see the volatility as a key feature, a key characteristic. They want to trade in that space. So for them, that's a huge opportunity. And then for the long-term investors, they have an investment horizon of 10, 20 years, so they can also handle the volatility. It's just about getting through the compliance and regulatory concerns, which I'm actually quite bullish on, especially considering what happened last week, where there was this whole fiasco in Washington on the infrastructure bill. But at the end of the day, there is now rules to tax crypto. So if the government is making money off crypto, they're not going to want to get rid of crypto. And maybe the rules are bad, and maybe the rules need to be changed, but I think there's just some alignment of incentives right now and some clarity that this thing is here to stay, that at least from our conversations, has not spooked investors, has only intrigued them more. And sort of the last thought on that is there's just so many different entry points with which investors are getting into the space. There's market neutral strategies, there's long beta strategies, there's active alpha bets. It's really a range of things we're seeing, and depending on the risk reward appetite, investors are getting into those things at different points.
That's a really interesting point, because I think you didn't have the ability back in like 99 and 2000 to really hedge. Like the idea of hedging was like not there way back then, right? Like you just retail investor, oh, this pets.com thing's really cool. But like you can run these market neutral strategies now in crypto, which is just like things are moving so fast, so much faster. And I don't know. I think I'm kind of in your camp where I don't see the big bust. Like I can't wrap my head around it with the amount of money that's stuck here in cash, backed by like central banks on like fiat steroids. So
Yeah.
well, let's pivot a little bit to like pricing power. Like I came from a world, like you said, passive funds are 0% to invest in. The hurdle rate for public equities is essentially zero. What is your pricing structure on like your products and kind of like commissions? Have they come down, and are they still like juicy relatively?
Yeah, sure. So first, sort of one of our core products is our trading services, our trading desk, where we have the ability through our connectivity to multiple exchanges and through our proprietary algorithms to move large positions without impacting the market and with minimizing slippage. So that's one of our core offerings. And our pricing power there comes from a few points. The first is that we have a higher aggregate flow to the exchanges than a customer would have on their own. And any discounts that we get from that aggregate flow, we pass on directly to our customers. So we do pure agency execution, and the customers see exactly what price we are executing on their behalf. We do things on exchange because we firmly believe, based on our data, based on our analysis, that exchange is where you can get the best execution if you have great algorithms to do it, if you have great algorithms like we do to not get picked off by other players in the market. So that's sort of the first thing. Our aggregate flow passes on discounts to clients. The second thing is that we source exchange liquidity in a very sophisticated way. And so we can do a deep dive on how our algorithms work. But again, it's that core idea that we are helping these institutions move very large positions, whether it's buying into a big Bitcoin position or selling out of an altcoin holding that they've had for a few years. And it could be a VC, it could be a foundation that they want to slowly exit, and we'll do that in a very careful way that won't impact the market. And then the third thing, which really can't be understated, is the minimal setup and operational cost. So both to build and maintain connectivity to exchanges takes a lot of work. The exchanges are all startups in their own right, and they're constantly updating, changing things, and our engineering team is working around the clock to maintain that connectivity to the higher standards so that if one exchange goes down, we have access to others. And on top of all that, you can do all these trading services, all these features of sourcing liquidity through an ultra secure environment, through the Access platform that Kevin was speaking to earlier, which is just a newer and higher level of security to exchange trading in crypto.
So what you guys really, this is how I think about it in my mind, is back in, before the public markets got electronic, right? You used to be able to call up ARCA on the West Coast, buy a stock at $10, then go to the New York Stock Exchange floor and, sell it at 10.50, which is just this huge arbitrage between like different exchanges. You have essentially built a product that does that arbitrage and minimizes the execution costs for like big institutional clients, which to me is like the next level of market structure, and which allows the big money to come in, right? Because before that, like it's like trying to, what is it? The pig is going through the python. Now the python's getting bigger, and you're like, okay, now we can like really facilitate some of this flow, and then the transaction costs kind of fall, but you're getting bigger and bigger pools of capital. That's sort of is that fair to say?
And it's not just one Python, Tyler. It's multiple Pythons to multiple exchanges that we are sourcing.
Yeah.
And by Python, we mean connectivity and APIs, and we can take this down way too far.
Yeah. We can take the analogy forever, but essentially what you're doing is you're making the whole ecosystem more efficient. Where back in 2017, like you had to have your relationship with Coinbase and your relationship with Gemini, and like figure out how to custody all that stuff, and you're like a one-stop shop for all that, and insecure.
Yeah, so I think I think the most important part of the example that you just brought up, because I think you're exactly right, but the example that you brought up of call West Coast, buy at 100, call East Coast, sell at 150, you get to capture that massive arbitrage. We want people to be able to do that in crypto too, because it's so important that these markets get a little bit more mature, get a little bit more stable. The difference is in crypto, imagine that you do that. You call your buddy on the West Coast, you buy at 100. You actually have to ship whatever that item is. Like, let's say it's a stock. So you have to take that paper. Imagine, we're back in the 70s. You have to take that paper, drive it all the way to the East Coast, and people are trying to rob you on the way. Like, that's where crypto is at right now, right? Because like, if you want to do that across Coinbase and Gemini, you have to find some way to move your assets from Coinbase to Gemini. And every single time you do that, you're paying fees and you're risking 100% of your principal to technical failure or human errors or all sorts of things, right? So the stakes are a lot higher to execute that arbitrage, which is why it still exists and why it's still extremely lucrative business to be in. So like that's a key part of the problem that we're targeting, which is it started off with us just focusing on the trading part of the stack of just make it easier for hedge funds to come in and set up their trading stack, and then we realized like the other half of it is like the whole flow of funds that are impossibly complicated and risky to deal with as well, and that's kind of where we landed.
Amazing. It's really cool getting this perspective, because like I don't think your regular Joe Schmo gets how important you're building the infrastructure, right? And it really facilitates bigger, better access. So let's pivot and go to staking, right? Tell me, because this is my layman's 20,000-foot view, but like when you stake, you can get a real hefty yield in crypto. So if you have an influx of capital into this ecosystem, and then you're getting paid a yield on top of it. To me, that's like the holy grail of investing. And can you talk about the products you offer and how like that whole thing is evolving? Because I know I think Galaxy and Bullish and these other exchanges now, they're figuring out how to offer these things that you guys kind of like offer already.
Yeah, I mean, so you've got a really good point, which is staking offers a really creative and novel way of earning some sort of yield on assets that are otherwise sitting idly. That sounds awesome, right? That sounds like free money. The issue is like, again, with staking, just like everything else in the ecosystem, it's technically complicated. It's brand new technology. Most of the stuff is unaudited or poorly documented or a terrible mixture of both. And there are tangible risks that you're taking in order to do these things. An example of this is like Ethereum ETH2 staking. So here are the primary issues with it, which is right now, when you submit your Ethereum, like your current Ethereum, let's call that like Ethereum 1, right? When you submit
Hmm.
your Ethereum 1 to the beacon chain to begin staking on ETH2, you're locking those assets up until ETH2 launches, which right now is somewhere between like 12 and 24 months from now.
Hmm.
And it could be pushed back 10 years depending on how quickly this launches. Now, clearly the Ethereum community does not want that. And I'm sure the community of developers behind it will work very hard to make sure that there's a reasonable timeline here. But that timeline is variable. So you're locking up your assets without any clear timeline of when you'll ever get those back. So that's step one. But step two is, if some issue happens in your software that's enabling your staking, and it's different a little bit across each chain. So let's just stick with Ethereum for now. You know, if you're staking your Ethereum, and for some reason, you know, your software goes down and you miss several transactions that you were supposed to give a vote on. Is this an actual transaction that deserves to be, to pass the consensus mechanism that says like this, yes, this is a good transaction, then you lose assets because that you're risking your principal. This isn't riskless. So like if
Hmm.
I'm a lazy staker and I only stake like 50% of the time, then I'm going to be losing money over time, right? There's an incentive mechanism built in to make sure that you are going to be online and available. That way, there's no period in time in which the overall staking power that it takes to overthrow the network via a 51% attack to make sure that can never happen. So
Can I make
the
a
yeah, go for it,
horrible analogy here? So
please.
staking to bring it back high level for people who aren't like deep dive. Is this fair to say like, hey, here's this like 10% yield. It, I'm going to give my money to this bank, right? And they're going to pay me a 10%. It's probably not Bank of America or JP Morgan. It's probably like, local Joe Schmo bank that, it's a little bit risky, right? You're like, hey, I'm getting this 10% yield at a bank. And that's how my mind works is like, I'm giving my money to this bank. They're paying me an interest rate, but with that, the risk of the protocol or the risk of the bank is how big they are, how big their balance sheet is. Similar is that a similar analogy? Is that fair?
I think so, right? Where perhaps like the comfortability that you would get from like the size of the balance sheet in banking terms is like the comfortability that you'd get with like the maturity of the technology in crypto world. Um, but like I
Yeah.
think it's reasonably same, and that there's something happening with those assets that can actually produce that yield. In the banking world, they're lending those assets out, they're investing them, they're doing something. In the crypto world, you're providing a service to the community, right? But it's still a similar concept of I'm locking up assets, they're doing something as they're sitting there idly, and I get paid, a healthy 10% in Ethereum in this case for doing so. And that sounds pretty awesome to me.
Hmm. Yeah, with the upside of growth too. It's like, where
Absolutely.
where can you get that?
Yeah.
And so what are the cool projects that you guys can stake? Like you have, three or four, right?
Yeah. I mean,
Can you get
so
into those or not?
yeah, so I can get into those. So ETH2 has been a big project for us, and that's about to go live. Super excited about that. You'll see the press releases and all the normal fanfare that we like to do for our new stuff.
Hmm.
Separately from that, we were one of the first groups to support Blockstack, which Blockstack is fun. For those of you who are not aware, Blockstack is a protocol that has been built upon Bitcoin. So it's a separate layer one blockchain, but it links its consensus mechanism back to the underlying Bitcoin blockchain, which is cool because, this separate blockchain, Blockstack, it can do interesting things with smart contracts that you don't ordinarily have easily accessible on Bitcoin, but it's still powered by like the security mechanism within Bitcoin, right? The consensus of all of those miners across the world mining. So we're supporting that particular blockchain for staking, and it's cool because you can lock up their native token STX, and there's a lot of risk that you're taking in locking up STX. It's volatile, it moves around, just like most cryptocurrencies do. But you actually get paid back in Bitcoin, which is really
Hmm.
cool. So you can lock up your assets for any multiple of 2 weeks. So like 2 weeks to like 24 weeks effectively. And you get paid back in Bitcoin in real time for your assets at work. That one's actually pretty cool because I would much rather earn Bitcoin for my staking rewards than really anything else, including US dollars. We
Yeah.
also support We also support inflationary tokens like Algorand, which they call it staking, but really everyone proportionally gets the same amount of assets. So it's more like an inflationary mechanism where it's like as long as you're alive and breathing, then your assets in your Algorand wallet will continuously accrue with like the standard mechanism they have across the board. And then we have a couple more that I can't talk about yet, but coming soon.
Gotcha. I won't poke too hard. So essentially, where my mind goes, being a macro guy, is you have these giant yields on these projects, right? As long as liquidity is coming into the macro market from the Fed, central banks, the balance sheets are growing, fiscal is becoming a bigger and bigger issue. Like $11 trillion in fiscal, we have an $8 trillion balance sheet on the Fed. Like some of that money in a world of financial repression where you have negative real rates, to me, my brain is like, oh my God, like here you have this Bitcoin thing that's becoming pristine collateral. It's now the credit markets are now financing Bitcoin, Michael Saylor's, big high yield issuance. So that is like a reserve asset now with a finite supply. And over here you have, almost 20 trillion of, money that just poof, exploded. So what's your advice to the millennials and Gen Zers, and kind of where would you put your money in this next 10, 20 years of financial markets?
Yeah.
And you can disagree with me too, don't worry.
Yeah. Yeah, sure. No, that's a really good question, and I think there is something to that. I think still to be determined on how Bitcoin really performs as sort of a hedge against all these concerns. There's still a lot of risk in it, but I think that more and more institutions are looking at it with the way that you're looking at it, Tyler. Some might look at it as sort of more of a risk on versus risk off approach, but I think there's debate on that. But if I'm a young person, I think you want to start with a diversified portfolio of return streams that you can expect positive return from, right? So that immediately is going to take out bonds that are negative yielding. It's going to take out a lot of sort of assets that traditionally were good hedges but aren't anymore. I think you still want to hold some equities, because in this type of environment where money is being printed at this rate, a lot of that does flow into equities, and we've seen the equities market hold up really strong, and I don't expect that to change anytime soon. But this is not investment advice, so I'll start with that disclaimer.
Yeah. I'm
But
calling your lawyers right now.
yeah. But
They're probably calling us.
Yeah.
exactly. So with that caveat, not investment advice, I think it's an incredible missed opportunity to not have some exposure to the crypto ecosystem. There's many ways to get that exposure. There's many ways for different levels of how much volatility you can handle. My advice would be to have some reasonable allocation to Bitcoin and the broader crypto ecosystem, to not pay too much attention to the volatility, hopefully to lose your password and find it 10 years from now. I actually talked to someone at Fidelity who said that the best performing personal accounts were from those people that actually lost their passwords, and they couldn't access it for a decade. So
That's incredible.
yeah, don't try to day trade unless you're an expert and it's your job, and just hold some allocation, whether it's 5, 10, 20%. I would do a mix of Bitcoin, Ethereum, and some other altcoins. And it's sort of like being long the internet in the early 2000s. If you were long the internet, there might have been some bumps along the way. You might have had Amazon stock and it could have plummeted. But if you just held on, forgot about your password, and looked up 20 years later, you'd be very happy that you had that allocation. And I think it's not just the speculation in crypto, it's the way that the blockchain technology will revolutionize finance. That's the real thing you want exposure to through a diversified approach.
And speaking of which, you hear this line a lot. It's like volatility is, it's not a bug. It's part of the whole, alpha that you generate in the ecosystem. So to get back into like centralization versus decentralization, I saw through my career, all the money basically flows to, BlackRock, Vanguard, as the pricing power drops for those companies. What is your view on decentralization? Talking to your peers and other companies and competitors, are they seeing this just massive secular growth too, or is this are you guys so early to it that what inning are we in this?
Yeah. One thought on sort of the centralization versus decentralization. Well, I think there is this big movement of decentralization. I think it is happening and will matter. At the same time, there is somewhat of a centralization of the largest pools of capital. The big pension funds, the big sovereign wealth funds are only getting bigger, and their big obstacle is how to allocate the huge pools that they're overseeing. So when they can write a multi-billion-dollar check to any of these big asset managers, it's sort of the minimum amount that they need to allocate to make sense to do. So I don't think that centralization is going away. And I also think centralization as a point of trust. I think people do like to have a person or entity that they can speak to and have that relationship. So I think that's there, and I don't think that's going anywhere. But at the same time, I think decentralization as a way for younger people to get access to financial services and products that they otherwise couldn't. For places all around the world that don't have the banking pipes like the U.S., for them to get access to financial services, I think that is going to be incredibly important, and both these things are going to grow in tandem. So I actually think the biggest pools are only going to get bigger, but the decentralization movement is going to reach new people that aren't even part of the system yet.
That's a great contra answer. I love that.
Thanks. Yeah.
Yeah.
I know an answer.
To expand upon that a little bit as well, in terms of like what we're thinking about from an organizational standpoint and what some of our competitors and colleagues are thinking about, there's a lot of robustness that you can have both technically and organizationally through decentralization, right? Organizations go through this awful experience by scaling, in which every single person that you hire, no matter how fantastic they are, no matter how fantastic your team is, every single person you hire decreases the efficiency of everyone else on the team by some small factor, right? I call this the chaos factor. I don't know if anyone's ever called that before, if I'm stealing someone else's thing, but you can say I coined it. I call this the chaos factor, where every single person that you add, it adds to the chaos a little bit. It makes the entropy a little bit harder to manage. So from an organizational perspective, it's very attractive to think about building a decentralized organization. That's something we're actively thinking about. And, many of our peers, other crypto startups who have started to, to hit the growth cycle where they're starting to face the scaling issues, everyone's thinking about it. And I think a lot of people, as unpopular of an organization as Uber is, I think a lot of people go back to the scaling model that Uber took, which is they were kind of pseudo decentralized, where they would go state by state, region by region, and set up a small team of like 4 or 5 people who would own that region, where of course they would all use the same tech stack, but they would operate almost as an autonomous little organization within an organization. That's really exciting to think about from the perspective of a business owner, which is how can we decentralize the knowledge and decentralize the decision-making power to make a more powerful organization. And right now we're just thinking about this in the most basic ways of organization building, but there are interesting ways to think about how to include this in actually the technical toolkit that we have now thanks to blockchain, such as DAOs, right? Such as using governance tokens to make decisions. All that's super interesting, and we're really early in the game for that to actually be useful. But that's coming, and a lot of people are thinking about it. But the other side of it, thinking about this from a technical perspective, centralized financial systems are not robust, and it's very difficult when they get to scale to make them robust. A really fantastic part of the decentralization pitch for us is how can you make systems that are, transparent and simple enough such that they can scale to billions and trillions of dollars of volume and still operate like they would at every part of the scale. Now, right now, we're seeing Ethereum go through the difficulties of transaction fees when you're trying to take that model. But the nice thing is that Ethereum has scaled pretty beautifully, other than the actual physical cost of using it, right? And it's beautiful because everything works transparently. You know exactly why it's not working, which is a fantastic thing to have, as opposed to working with like decentralized exchanges, for example, in which, the inner workings are dependent upon, them being honorable and truthful and, responsible members of the community. But again, you never actually know why things aren't working. That's why the whole concept of decentralization of organizations, both technically and just from a human building perspective, it's super fascinating. Everyone's talking about it. I think it'll be a very long time before we get there, but I think undoubtedly all these crypto companies they're building, I think they realize the disagreement between their values, as a company and the way they're building their company. I think a lot of people are working to ameliorate that, including us.
Super interesting. Well, guys, that was an awesome conversation. Really appreciate it. And, let's come back in a year and check in to see how the ecosystem has evolved and if your predictions ring true.
Thank you,
Looking
Tyler.
forward to it.
Yeah, thank you for having us. And I just want to give a quick shout out to Blockworks, who's having the Digital Asset Summit next month. You didn't get to see, but I'm wearing a Floating Point Group shirt, so I'm putting the camera on here. We will be giving these away. We will be giving these away at the Blockworks Digital Asset Summit. They don't just look good; they're very comfortable. So attend the conference, get one of these shirts. See you there.
I love it. It looks better than this one. Is it?
That's pretty cool. That's pretty cool. I'll trade shirts with you, honestly. We can trade.
I was trying to represent your Boston roots, man.
Yeah, I like that. We can trade.
All right, guys. We'll catch you soon. Thanks again.
Thanks, Tyler.
See ya.